Good morning, folks. This is Mayuresh Joshi from William O'Neill, India. I hope my audio is loud and clear. So if you can give me a few heads up for the audio and whether you can see me and Shankar sir both very, very clearly. So then that should get us going. A few more responses would be great. And you'll have to excuse me for my voice. I've got a very scratchy throat. Viral infection is in the air. So superb, guys. Super. I think it's loud and clear. And you can see us, right? Both of us. Yeah. So morning, folks. Mayuresh Joshi from William O'Neill, India. First of all, wishing all of you a very happy Ganesh Chaturthi and hope the festivities bring lots of joy, health, wealth, prosperity, and happiness to all of you. Extremely pleased to have Shankar Sharma with us at this point of time. Shankar needs no introduction. He's been in for decades into the market. He's seen bull markets, bear markets, and he has guessed cycles to the T perfectly on every count. And there was not an opportunate time, but now when Shankar, we asked for Shankar sir's time and he readily agreed. So I think the best person to analyze the current markets is Shankar Sharma and nobody else. Morning, Shankar sir. Thank you so much for giving us time and speaking to us and all the participants that are here.
Sure. Thank you, Mayuresh. Thank you for having me, and a very, very warm good morning or good afternoon to the various people who have joined in. And I look forward to a very nice, engaging, stimulating conversation today.
Absolutely. So let's start and let's dive straight in. What we are seeing, Shankar, at this point of time, obviously is a huge kind of dichotomy within the global markets. European markets almost near their year lows. US markets are getting there. And Indian markets are on the opposite side of the pole, reaching all-time highs. So do you think this differentiation that is probably happening, the decoupling, if one may call it, would last, at least looking at how the global macros are shaped in position?
So let's understand this. And I, while I've been born in India, I've been raised in India, I've gotten all my education in India, barring my MBA. I continue to, while I live in Dubai, heart is Indian. I visit India extremely often. I'm there practically every week or 10 days. So what I'm going to say doesn't mean that, I am not supportive of what the market is doing right now. It's much to the contrary, that I think the Indian stock market has completely broken away from the larger trend of moderately bearish global, markets. I think there is no debate on that anymore. But the important thing is we should view history in a little longer frame. And if we go back to 2009, when the previous bull market started, okay, and 2010, when it really took off. What is important is that from that period up until very, very recently, which is as recently as, let's say, a few months ago, the Indian stock market had delivered next to nothing in terms of returns, barring the big fall in COVID, and then it rallied. But if, just smooth that out, on a 10, 12-year basis, the returns from Indian stock markets had been very, very disappointing. And in fact, up till March 2020, it had been below fixed deposit returns for the preceding 10 years. While US market returns were off the charts. We know that. I mean, the whole tech boom, the FANGs, hundreds of smaller tech companies, they drove the NASDAQ up, I think, maybe five times in the last 15 years. So at that point, nobody talked about the US decoupling from India, right? So we should not get into this debate of decoupling or coupling or whatever it is. The reality is that ultimately markets are cyclical, okay? And what does well in a certain period will not do well in the next period. And exactly vice versa. So India did very poorly versus the US from, like I said, from 2010 up until 2020. And now India is breaking away from that trend of actually having lagged the US markets and going into an outperformance zone. So it has nothing to do with uh, cheerleading or patriotism. It is simply a cycle in the market that we are in. And I think that these cycles don't come and go in a month's time or 2 months, 6 months time. When they start, they are like a giant tanker. Okay. When they move in a direction, it takes a long time for them to keep moving, and they don't turn course very easily. Okay. So like US's outperformance started in 2010. It lasted for nearly 12 years. Okay. It wasn't a flash in the pan. India started that same outperformance trend, and I think the next 10 years look great for India.
So, Shankar, I think to put it in your words itself, does this become a buy on dips market, irrespective of what happens in the globe? We are hearing gas energy prices go through the roof in Europe. Maybe recession is inevitable out there. Interest rate, liquidity tightening happening on a larger scale in US. US might be shortening its liquidity curve by almost 90 billion or from 50, and then probably curbing a lot of demand out there. India should still survive within all these global macros, and it still remains a buy on dip in that case.
That is correct. So global macros are great things to keep analyzing, and we must do that. But they do not necessarily dictate the course of individual companies.
Yeah.
Okay. They can dictate the course of large blocks like emerging markets or developed markets or frontier markets. But if you drill down to a particular company, irrespective of whether global macro is great or bad, if its particular line of business, particular niche is good, it will end up doing very well in the stock market sense, in terms of numbers sense, in terms of performance sense. And therefore, in my view, looking at global macro up to a point is fine right now. But I think we should not let it cloud our overall thinking so much that we become fearful of what we need to be doing, which is to buy every single dip that we see in the markets. And we should be thankful to global macro for giving us these opportunities from time to time.
So, Shankar, I think you've been a great proponent in terms of picking out stocks within the broader universe. We all know the great picks and multi-baggers that you picked out. So if you're saying that it has to be a stock-specific approach for the broader markets and for the interest of our retail investors who've tuned in and hearing this conversation, what should be those sectors within the broader universe, if you can break that up, if possible, which can do extremely well, irrespective of what happens?
So I will simplify things for you, okay?
Sure.
Because for the average retail investor, doing the work of a professional investor, full-time investor, is not possible, is not feasible. So the way they can play this market and make a lot of money, in my view, in the next 3-5 years, is to simply run screeners. Okay, and on the many apps available today, you can run screeners. You can, ask somebody to build certain screeners for you. It's very simple. It's no rocket science. And then buy that whatever comes up on the screeners, buy not 1, 2, or 5, buy 25 to 50 stocks.
Oh, okay.
Okay, get this right. Buy a minimum of 25. You can go up to even 70 stocks. It doesn't matter. Okay, but don't go below 25 stocks. So by doing that, the average retail investor would have achieved two things. Number one, he would have achieved peace of mind because his average allocation is maybe 2 to 3% per position on the average, right?
Yeah.
Therefore, his risk of getting wiped out is next to zero, because if you have done even a moderately good job of picking well in your 25 to 50 stocks, it is impossible that all 50 will fall 50%. It's not going to happen. Okay? It's not possible. So what's going to happen in reality after 2 years is that out of the 25, 50 stocks, you will have 4 or 5 which have broken away. It's like a team of marathon runners. At the beginning, they're all bunched up. Okay. And then you can see after 2 miles, 5 miles, 8 miles, the field is beginning to spread out. When, a few are laggard, few are in the middle, and 3, 4, 5 runners are right at the top and running well. That is the point, which might be even after 2 quarters, maybe 3 quarters, you start to move away from those bottom guys, take away money from them because they are not doing well. Okay. And you put money into the guys who are doing well. So you start out with a larger catchment, and with time and data and performance, stock price movement, you add more weight to the ones where you started out with just 2% weight. So after 1 year, you will find that you have ended up with like 5 stocks which account for maybe 20%, 25%, 30% of your portfolio. But you did not start out with that. Because nobody in this world can tell you where a stock is going to go. Nobody. We have broad understanding. Okay. We have broad views, but there's not a guarantee. Okay. Sure. Not a guarantee. And that's why people waste a lot of time following people who say high conviction idea, put a lot of all total nonsense. I find it such dangerous advice. It is dangerous advice. I mean, it is like when you see an ad on television and they say stunts performed by experts. Okay. That's the way it should be. That boss, just because you put 100% of your money in one stock and by God's grace and nothing more than that turned out to be okay, doesn't mean that you did the right thing. You can make money doing wrong things also. Okay. It can happen in the stock market. We can do the stupidest thing and it turns out, well, you're looking very good, but that does not mean your process was right. The right process is start with 25 to 50. Over 1 year's time, 5 runners in that pack will have broken away from the pack. Then you move more capital into them. With every dip, put more capital. As long as, by the way, the numbers are coming through, performance is good, commentary is good. You have to obviously do all those things. But I'm simplifying it for the sake of investors. Please do not start with 5 stocks. Do not. If you just follow this one simple mantra, I can tell you all the people in this webinar will be way richer with far more peace of mind 2 years out.
So Shankar, I think when the beginning you said 25-50, I was going to ask you, is it 25-50 or are you saying 2 and 5? And then you repeated that time and again. So I think the investors, so guys.
No, folks, I can tell you today I have 54 stocks in my portfolio.
Oh, okay.
And I'm looking to add another 20 in the next maybe week or 10 or 20 days time. It doesn't matter. And of that, I know 5 or 10 will be up like 20x in 3 years time. I don't know which ones. Okay. I have no idea which ones. I have a guesstimate. I have a feeling.
Sure.
Okay.
Sure.
I have a feeling, but I can't work on feelings only. I need a system and a method so that method allows me to, it's like going fishing, cast your net wide. Okay. From that, you will find good ones coming through. So I know out of my 54, 5 to मैं उस पर 20x बनाऊंगा ही बनाऊंगा 100%. This is a no-brainer. Oh, and that's the way to do it.
No. So I think, folks, that's one of the most practical advices that you can probably get into the market as well. And Shankar is being very honest about it, right? He doesn't know. He's doing some guesstimates on what the stocks might do, looking at performance, earnings, and all the other stuff. Etc. as well.
Who in the world knows? Who in this whole planet can tell you what's going to happen next week? Nobody. Let's not even pretend.
Absolutely.
But we can have a method which improves our chances of winning.
Absolutely. So I can't ask you those 5 stocks, Shankar, which are expected to be 20x.
Because even I don't know. I have a team of 50 runners. Now, who's going to get the gold, silver, bronze? Do you know in the beginning? You don't know. Absolutely. You have a guesstimate कि ये लोग ये 4 लोग top 4, 5 होंगे. मालूम है क्या? नहीं मालूम है. हो सकता है जो सबसे least ranked runner था वही जीत जाए.
But just to follow up here, Shankar, I think, are they typically small caps where you believe that we might turn into mid caps over the next 3 to 5 years? or
Yeah.
are they
So
already mid caps?
I'm giving a very clear view. In my view, we are in a runaway bull market on small caps.
Oh,
Okay.
okay. Okay.
Absolute runaway bull market on small caps. On large caps, it's very patchy picture. Some stocks are not going anywhere fast. Maybe 10-20% of the Nifty might do well, but broadly speaking, Nifty will lag the small cap space by a wide margin. 2 years from now, I would not be surprised if the returns from small cap index is maybe 50% higher than the Nifty returns.
Oh, wow.
Okay.
Wow. It's very
And we can
encouraging,
see
sir.
a huge performance divergence between small and mid caps. So between small and large caps. So
Very,
therefore, I'm saying very, very clearly, my 50 are belonging to the mid and to the micro. That is the segment.
okay.
Okay. I
Okay.
have no interest at all in Hindustan Levers and Nestle's and Asian Paints. I have no, and I repeat, no interest. Zero. Because at best, they can give me a 10%, maybe 12% compounding. Okay. I'm not interested in wasting my time in a very broadly volatile business like stock investing to make 10 or 12%. It doesn't excite me.
No, fair enough, Shankar. Just to play a devil's advocate out here, just in case on a hypothetical situation, the next few months, we really fall into a global macro trap and the market start correcting in a very significant fashion. Uh, your belief in terms of micros, small caps, and the lesser known mid caps correcting larger, does that case not stand up in terms of diminishing returns from a medium term perspective? And in that
Yeah, it
case,
can happen.
whatever corrects, how do you choose which ones to add on more in that correction?
Good question. Good question. So this is my third Mantran method. Do not buy stocks which are correcting more than the market.
Okay.
Okay. I'm not talking 1 day or 2 day movement. I mean, those can happen. Okay. Odd days will happen for even good company. That's ignore those. Those are noise. I'm saying over a 6-month period, if a stock has corrected way more than the market, and then you're finding that the numbers are not coming through,
Okay.
do not put more money in that.
Okay.
This is a game of staying with the winners. Stay
Absolutely.
with the winners in your pack. Do not, please, for God's sakes, try to think that you are smarter than what the market's wisdom is, and you will buy the losers and make a lot of money. Statistically, it is going to be a very low probability that you're going to become very rich having bought the worst performing stocks in a market. Usually, biggest money gets made by buying the best performing stocks. So put more money in a correction on the better performing pack of your portfolio than on the worst performing pack. And what we do is exact opposite.
Yeah.
We end up selling the better performing ones and we keep the worst performing ones. So at every fall, you have a worse portfolio than what it should be.
Absolutely. Absolutely.
I can tell you, as decades of trading has taught me, that a stock can be a buy at 100 and be a sell at 50. I mean, it happens. That's the way it is.
Absolutely. No, no, absolutely. Point taken. In fact, Shankar, your view resonates with the O'Neill philosophy and methodology as well. I think hang on to your winners and let go of your losers. I think that's precisely what O'Neill used to advocate and still does. So I think it's very difficult, Shankar, to probably bracket themes within this universe, right? But still, can you give a broader perspective in terms of these spaces that you're looking at? What are the themes? A generalized approach on what investors can look at, and they probably can use scanners to micro pick within.
So I'm saying in small cap or micro cap investing, that itself is the theme.
Oh, actually, yes.
Okay, that itself is the theme. So if you're looking at thematics, that is the place to play. That is the pond in which you should be fishing. Don't go fishing in the large cap pond. I mean, you might get an Adani if you get lucky, and if you bet against wisdom of the crowd and you made that. Those are one-off events, but that's not going to keep repeating itself, right? But so thematically, top down, if you see small caps or even micro caps, great place to be in. Within that, I find when I look at my portfolio, there is no clear sectoral bias at all because these companies are so diverse. They cannot be even put into any sector.
Exactly.
It cannot be. I mean, I don't know what sector, because those, understand this, India is still a very emerging market in terms of the depth and the breadth in every sector. Okay. So if you look at payment companies, for example, I mean, you have one company right now which is listed. There might be a couple of more quasi. You don't have 25 companies in that. So it's hard to even call that a sector per se.
Absolutely. Absolutely.
A sector with one company cannot be called a sector. I mean, sector ke liye, we need like a 5-10 stock, weightage in every sector for us to even talk that it is a sector in the first place. So because of the smaller companies being so diverse, I can't even put them into any pigeonhole. I'm just saying, buy good numbers, buy companies which have good sequential numbers. Sequential is very important. Companies that are, the June numbers have soundly beaten March. March had beaten December. And then, of course, look at the top line growth, because that is more important than bottom line growth, because the company growing top line means eventually margins will catch up.
Oh, absolutely.
Okay? But if your growth is coming largely from the profit part and not the sales part, okay, I would be more concerned about that kind of, profile of a company, because top line growth is critical. Profit growth has, aap ek baar cost cut kar loge, you may some rationalization, but it's not like a permanently repeating thing. So I'm just saying, follow this simple hack. Okay. Do the screeners, buy 25, 50 companies which come up in your net, so to say, in the screener, and stay with them and let the market tell you where you should be putting more money. And don't, please God's sake, put money in the losers.
Oh, absolutely. Point taken, Shankar. So just to add to the screeners, I think any particular number you have in mind, I mean, a 20-25% top line growth, ROEs at a certain level, debt equity or cash flows, free cash yield. I mean, any number that you can peg or point.
I mean, okay, so this is a very subjective thing. Many people will have different criteria. I don't look at 25% sequential, and my cutoffs are about 10%.
Oh, okay. Okay.
10% sequential is very, very good by any standards, to be honest with you.
Okay.
It's not bad at all. 10% YOY might be different, okay? But 10% sequential, that means June grew over March. I mean, that's a significant number. And I don't want to make it so hard for companies to come through. So once I have run that, let's say on a 10% sequential growth, I will have maybe 100 companies in that. Then I will, filter them further with other tools and techniques to come down to my 25 or 50 stocks. Okay.
Sure.
But if I make it 25, then 25%, then I might get only maybe 10, 20 companies, which means my catchment has come down.
Correct.
So in a way, it's like selecting a team. Start with 200 players. Yeah. Why do you want to start with just 25, 30 players? Okay?
Oh, absolutely. Absolutely.
So widen the net, see them come up the various tournaments, and then you will find your perfect team of 16 players. And that's the way you will build a great team. You don't start with 20 and hope to get 11 good players. It doesn't work like that.
Oh, absolutely, Shankar. And is there by any chance that in the portfolio that you have at this point of time, there is concentration of a lot of stocks which belong to a particular area or a particular sector or subsectors, as you're saying, within those areas as well? I mean,
that's the positions in certain stocks are concentrated. Okay. But they don't belong. It's not like I'm taking a sector bet per se in them. I'm taking stock level bet in the positions where I will have significant, like let's say 20 crore position or a 50 crore position. I will have those in companies, not sector bets, to be clear. Okay. So, but I mean, obviously for an average investor, you don't want to go into concentration. I'm just repeating this, many, many times, that please do not go into this concentrated thing. It doesn't work like that. It will cause you immense harm if you just put 80% of your investable money in 5 stocks. It will cause you huge stress. Even if you make money, frankly speaking, that's going to be largely luck, not skill.
Oh, absolutely, point taken. I mean, just a user question in this point of time, which I thought is very appropriate. We will take user questions, Shankar sir, at the end of the session. Pranjal, one of the users, has asked a very interesting question. Do you use technical analysis when you initiate a position as well? I mean, do you look at technical analysis at all?
That's a good question. So I use a lot of technical analysis, but not in small caps. Okay.
Sure.
So technical analysis is very, very good for large, liquid, well-traded issues. And it is absolutely useless for small caps, micro caps, because their technical can go from bad to good, good to bad in like, 25 minutes. So because those are such thinly traded ones, a big buy order can change it, big sell order can change it. So there is a time and a place for technicals, and I know I've followed it for 30 years, but focus on the indexes or the large cap issues rather than bringing it to a small cap stock.
Sure. Point taken. So, folks, I think point very clearly mentioned by Shankar sir. I think if you're hearing it and taking your notes, please add that to your notes from this session as well. So let's divert, Shankar, to a few sectors and your views on that, because a lot of investors will be interested in hearing your views on a few sectors as well. So let's begin with banking and financials. I think have held up pretty well. Your take on the universe as a whole, and whether large caps obviously are doing well, but the mid cap space and specifically the PSU mid cap space, I think, do you find substantial interest out there, or any other space within this large universe?
Excuse me, I've got a bit of an allergy today. My apologies. So, I mean, if somebody wants to waste time going and buying PSUs, they are welcome to do that. I don't waste my time buying PSUs because, I mean, there are far easier ways to make money in the markets. And there was a lot of hope from this government that they would fix the PSUs and make them more efficient and make them better and all that. Frankly speaking, I don't see that having happened. In fact, the strategy is more to sell them off rather than to build them up. And if that is the objective, then I don't see why I should be wasting my time, on these companies. As far as financials are concerned, again, to me, they don't appeal enough. Again, I said, it depends on what you're looking for. You're looking for a 10% compounding, maybe HDFC Bank and Kotak Banks are good for you. I'm not interested. So, I mean, for me, those I don't even know the stock prices, to be honest with you. So it depends on what your goals are. I mean, investing is a beautiful business in which you can define your goals and you will find something to suit that goal. My goal is not to make 10%. Therefore, for me, all these companies they just exist as a part of an index. That's it.
So banking financials, no interest at all, even the small caps?
I'm not interested.
Brilliant. I think one theme that is on a hot roll right now, Shankar, is also the defense theme. So any stocks within that universe, I mean, I'm not asking for a stock specific recommendation. I think, do you like the defense as a theme? There are a lot of small micro caps within this theme also, which can do well, very niche players.
Oh, it is good, but I think we should be very, very careful in sectors where your buyer is the government. Okay. Usually nobody makes money buying a stock that derives 100% of the business from the government of India or any other part of the government. Because, first of all, defense, for example, is going to be driven by tenders. Okay. And wherever there is a tendering thing, I don't see how you can make big money out of those. Okay. Because tendering process itself reduces margins across the board. Okay. So first, that is itself a problem. Second, these orders are lumpy. They are not like a steady stream of orders. So you might get an order to make whatever, night vision goggles, 10 lakh pieces this year. But you might not get anything for the next 3 years after that.
Yeah.
Because somebody else came in and, got that order, or they did not tender again for it for a number of years. So these are lumpy businesses. They are fairly choppy. Okay. Because they are contract-driven, tender-driven businesses. These are not daily you are going to get an order, and so there's a continuity to the business. So there can be a lot of excitement. Please be very careful before you get too excited, because you're dealing with the government at one side. And if, for example, if a listed company are making a lot of money, 30-40% margin, I'll guarantee you that the government will want to take a look as to how they are giving you so much money.
Absolutely.
So there can be CBI inquiries, there can be corruption charges, there can be charges of fixing the tender so that you got these things. And trust me, all of those things happen. Okay, let's not pretend otherwise. Okay, So it's a double problem. If you make too much money, that itself is a problem. But in reality, you may not make money at all because of the tendering process. And third, getting paid on time for whatever you have delivered is another challenge. From government, nobody gets money on time. Even to get that money, you have to pay money. So, I mean, I like to stay away from businesses which have the government as its main customer.
Point taken, loud and clear, Shankar. I think very solid views on that. And therefore, I was going to ask on the OMC and the oil space. I'm just deleting that question out of the chat itself because I think the views
No,
are
no, no,
very
forget it. Why do we need to waste time
exactly,
with all this?
exactly,
These are the 25-year-old trades here. They
exactly,
don't matter anymore. Forget it.
exactly. So, capital goods as a space, Shankar. I think. Do you find that interesting?
It's good. Again, you have largely the government as at one end of the spectrum. Very lumpy business, very choppy financials over time. You can see extremely choppy financials. Be very, very careful of businesses which are based on tender outcomes. Because if you don't win that tender, you're finished, right? And
Absolutely.
if you win the tender at low margin, again, you're finished. And if you win the tender at high margin, again, you're finished because the government will say, itna paisa kaise kama raha hai mere paas? CAG will, CAG will, CAG will come up with some ridiculous number, itna loss ho gaya exchequer ko. We have seen all that bullshit happen in the past. It can happen in the future also.
So I think a lot of hula has been laid around 5G, 5G spectrum, auctions, ancillary players around that. Do you think it really makes sense, or again, I think it's just
No, 5G is good. So if you buy companies which are going to be the plumbers in the system, making
okay.
equipment, helping companies roll out the networks, I think you're in good shape. That's a good place because there you're not dealing with the government, dealing with private sectors. So your customer is going to be a Jio or a Airtel or whatever. That's a good, absolutely fine space to be in.
So all these telecom ancillary plays seems fine.
Yeah. I like that space, 100%.
Great, great. Uh, Again, I think a lot has been said on in the introspection that you probably look at, right, on a lot of these platform companies, and you all know your views on platform companies as well. But there are some niche players, like within the CPaaS space, and you're doing a lot of global study on that as well internally. Your take in terms of these niche spaces that are still building up a lot of capabilities. You find a lot of value here or a lot of momentum for the next few years. I think it's.
I don't know whether in listed space you have a lot of platform companies.
You've got, I
You
mean,
also manage.
diversity can be something like a Tanla or around mobile. You're probably looking at Twilio on the global scale. Or
Yeah, I don't know whether these companies have any tech edge at all or not. If I look at the profile of many of these companies, promoters, they are like some BA from some Rajasthan university or something like that. And I find it hard to believe कि यार क्या ये लोग क्या technology or tech और ये वो करेंगे boss. So मेरे को, I mean, I'm skeptical about all these things. I mean, you again remember this. I don't have to make money in every stock in the market.
oh, absolutely, pointing. Yeah.
And by the way, even if I want to participate, I'll put चलो आधा % डालते हैं ना portfolio का, देखते हैं क्या होता है. So that's the other way to do this. So my attitude towards investing is that okay, convince me that it's a great one. Okay, I have my views. It may not be so, but चलो इतना क्या मारामारी करनी है, आधा % डालते हैं ना, देखते हैं, हो सकता है ये कंपनी Facebook बन जाएंगी या Amazon, पता नहीं, जो भी बनना बन जाएंगी. और नहीं बनेगा तो ठीक है यार, बेच के चले जाएंगे 2 क्वार्टर के बाद में.
Point taken. So I think
इतना क्यों मारामारी करना है यार. हम तो मतलब इंसानों के ऊपर मारामारी करनी चाहिए ना, ये शेयर के ऊपर क्या मारामारी करना. ठीक है यार, तुम्हारा व्यू अच्छा, मेरा व्यू खराब है, तुम इतना कन्विंस करो, चल यार थोड़ा डाल देते पैसा. मैं बोलता 5 लाख रुपए डाल दो यार, क्या फर्क पड़ता है.
Point taken. I think a couple of themes which were on a hot roll, right, in the COVID time, specialty chemicals and textiles. So individually, I just want your views on both these spaces. I think it's a vast universe in specialty chemicals, but there are a lot of small companies which can probably do well. So your take on that?
It's a good area. It is again the problem in chemicals is that it's a very vast.
Yeah.
Chemicals are even chemical players themselves don't understand the full breadth of chemicals, right? Absolutely. Everybody has a niche. And to understand the dynamics of each niche it's a very, very time consuming process. Okay. And it's a very technical subject. Even, chemical engineers have a tough time figuring out a lot of because to understand the chemistry is one thing, but to understand the commerce along with the chemistry is another challenge altogether. Supply kahan se aayega, what are the various, demand supply dynamics that are shaping up. So again, good area. I like it. I've made a lot of money in chemicals, so I'm well disposed, but I still find it hard to understand many of these things. Because a very, very technical area. Again, the way to play chemicals, if you like it, is that run your screeners and buy 5 or 10 of them. Don't buy one. Okay. Because again, you don't know which of those are going to do, really well. So again, follow a method. Follow a method in this investing process. Somebody says chemical sector is good. Let's run the screeners. Let's find 5 companies. Okay, so we'll put some capital in all 5 of them. That's fine. Then we'll see.
Okay. So fair enough. And what about textile, Shankar? Again, a vast space. You've got spinning, winning, sab kuch hai usme.
Not interested. Not interested.
Fair enough. How about soft?
It's a traditionally low PE business, it's a commodity business. And if again you go into branding and all, that's another challenge. Again, we want to make life simple. Yaar. Itna kyun mehnat karne ka sab cheez mein chodo? That's for the promoters of those companies. That's not for us. The beauty of our business is, as I always say, I have 50 Indian and global promoters working for me. Okay.
Absolutely.
So I let them work, and if they don't do well, I fire them after 2 quarters. Yeah, very simple. What is the problem? Simple.
Absolutely. But how about these soft commodities? I mean, we'll go to the metals part as well. But the soft commodity, I mean, you play those cycles because those cycles can give fabulous returns, 4x, 5x times, whether it's sugar.
So I mean, I know the cycles. I'm aware of the cycles, but I don't play the cycles necessarily now. I just want to make my investing as systematic as possible. Okay. I don't want to depend on myself anymore to make me money. I want to depend on my systems and my processes to make me money, which is very different from, let's say, I would do it 20 years ago, where I would depend on myself, my thinking, my whatever little wisdom one had. Over time, I moved the needle away from that into a more methodical process of investing. And I find that that gives me far better results than my individual thinking that I have to spend time on commodity cycles or this cycle or that. I do a lot of that. But it doesn't mean that that will dominate my thinking or my portfolio. So, for example, we bought steel back in April 2020, May, Tata Steel, JSW and all that. And we made 3x and we exited that last year in June, when people were forecasting great things for steel companies. And that's the time when I become very skeptical. मार्जिन बढ़ता जाएगा, प्रोडक्शन सब चीज बढ़ता जाएगा, कुछ घटने का चांस ही नहीं है ना. ऐसे कि बहुत बार सुना है, छोड़ो इसको, बेच देते हैं. बेच दिया. वहां से you can see many stocks have fallen a lot. So those cycles, of course, I look at those. There's no doubt about it.
No, absolutely. So I think I was going to ask on metals, and you've answered the question within the answer that you gave right now as well. Just take a few user queries, Shankar. It's almost 12:25. You've got 5 odd minutes before you wind up. So broadly, I think 3-4 questions on sectors itself. One user is asking on the IT sector. I think huge correction seen. Do you see value within the mid-cap space here?
Mid-cap IT is good, pick well, but I think those will do probably better than the large-cap ITs. Again, run your screeners. I'm just simplifying things. Of course, ideally you should do a lot more than that, but if you don't have time, do that basic thing. Read up on their conference call transcripts, investor presentation, which are uploaded on the stock exchange website. Do all that. That's a good space to be in. Again, please do not buy one. Buy 5 or 7 of them.
So I think the message from Shankar sir, folks, is very, very clear, right? Buy not one. Buy at least 3, 4, 5 within the space that you got interested in after running your filter. Right? That message is becoming very, very loud, and it's very, very clear as well. One space, Shankar, that a lot of investors have a lot of interest in is the EV space. I mean, we're hearing a lot about that. A lot of startups, a lot of companies getting into this space. So is this an interesting area over the next few years within the auto ang space specifically, which can do well, whether it's lithium ion
I
battery?
don't want to. No, that's a good space. Obviously, we know from the low base it is coming from. It will become a significant base. Rather than bet on the manufacturers themselves because they are going to take a market risk, you should bet on the plumbers, guys who are supplying components
Yeah,
and things like that. So I've never believed that you should go out to buy necessarily the front end company because the success rate in those is going to be very, very difficult to predict whether Maruti wins or M&M wins or Tata Motors wins. Who knows? But if you have good component suppliers to these companies, or for that matter, some global companies, those are the places. Again, go and buy 4, 5, 7 of them. Because EV being, people have very little niches in the EV, value chain. Go and put a little bit of capital in 5, 7 of them. A few of them will do phenomenally well. Again, which ones? I do not know.
oh, absolutely. I mean, that you're reiterating time and again, I think. Which of them will turn out to be a 20x?
In any emerging sector, how on earth do you know who's the winner?
Absolutely.
So we now say Infosys great company or Wipro great company and all that. But trust me, 25 years back, we had no idea whether they were going to be great or going to be part of a lot of tech companies which went bust in the 2000 collapse. We had no idea.
Absolutely.
We only know after 25 years who were the survivors. We look at HDFC Bank. I'm saying go and look at the list of banks in 90s. There were at least 10 or 15 banks that went bust or were acquired and or died out. One bank survived, yeah. How do you know who's going to survive?
Absolutely.
So buy like 4 or 5 of them based on good fundamentals, then you hope to God that 1 or 2 will be out of the park hits, which will be statistically, it will happen.
Oh, absolutely. Roj Hanuman Chalisa bolte raho, Shankar sir. Is that the mechanism of the Bible? So I think just a follow up on that as well. Then, so platform companies, we know your views on that. But does it then make sense to buy a bunch of them as well? I think one of them can be absolute multi-bagger. You never know which.
And I am saying never say no. If something comes to even halfway decent, appeal to you, put some money, na. अरे 2 लाख रुपया डाल दो यार.
Correct.
मैं बोलता हूँ 2 लाख रुपया भी 10 times होता 20 लाख रुपया होता 20 लाख रुपया can give you a lot of pleasure. Trust me, even at my age and my level, I find 20 lakh rupees ऐसा ही कुछ में डाला उसमें 10x हो गया. Right? I never regret कि अरे उसमें 20 करोड़ डालते तो अपना 200 करोड़ रुपया बनता. पहली बात उसमें डाल ही नहीं सकते थे. Okay? And 2 लाख रुपया डाला जाता तो 2 लाख रुपया जाता या 1 लाख रुपया जाता. बन गया 20 लाख रुपया. चलो now go and have a holiday in Europe or do whatever, something like that, right? It's okay. So you should divide your thinking that not every trade is meant to give you a penthouse.
Yeah.
Some trades are meant to just give you a nice holiday. Okay. So you divide your life in that sense. This trade or these bunch of trades will take me to a different orbit and to the net worth. These trades I call it the Pandukan level trades. They will give you your, loose change. कि चलो एक holiday कर लेते हैं यार थोड़ा extra पैसा आ गया है. Those are that part of your life. So divide it in that sense. Sure. Don't think that every trade will get you a penthouse or that every trade is meant to be just a holiday trade. Just divide your goals. You find enough stocks where even 1 lakh rupee, if you make 5 lakh rupees out of it, what is the problem in that? It's good fun.
Absolutely. One space that a user is asking, Shankar, is cybersecurity. Your views on that?
So it's a very, very technical area. There are a lot of companies worldwide. I invested in a company in the US, CrowdStrike. Okay. Very volatile journey. A lot of these things, one needs to be careful about what promoters tell you and what the reality is.
Sure.
Okay? So, and India is still fairly backward in terms of tech. So, we don't know how real their edge is. We have no idea, and we don't know whether that edge is sustainable, whether a Google tomorrow cannot enter that space. We have no idea. Again, people in India are very smart. I'm talking about the promoters. They're great marketeers. In fact, I say they're better marketeers than, even the ad agencies. they can sell you stories after stories after stories. Cybersecurity, EV, कभी clean energy, कभी green energy, कभी hydrogen, कभी वो पता नहीं क्या क्या, वो समझ में नहीं आता आधी चीजें, उनको भी समझ में नहीं आता, लेकिन they talk like as if they have done a thesis on that, and there were 2 Nobel Prizes on that. It's all nonsense. So this is a good buzzword, this क्या बोलते हैं उसको, this network security or whatever it is. I mean, I really don't know whether we have that edge in our promoters to give you great companies there.
Oh, absolutely. So I think, Shankar, we are running out of time. I think it's almost 12:30 India time. Just to summarize quickly on what pointers you put forth for the benefit of our investors, buy stocks which are, between 25 and 50 number, right? And whatever stocks you probably like, buy 4 or 5 of those within that theme itself. So the concentration risk probably goes up. So that's point number one that Shankar is time and again reiterating. He's probably just earmarked a few themes, just to put it very, very happily. 5G equipment space, look out for screeners within that space. Speciality chemical, mid-cap players within that space as well. Mid-cap IT, Shankar finds that very, very interesting as well. And some few niche areas, because it's very difficult to thematize or have a thematic view within the small cap or the mid-cap universe as well. So I think that's on that, Shankar, regarding a conversation. There is one user where you and I just had a conversation before we began on the fitness regime that you're following. And he's saying that we saw your gym photos on Twitter. Really great shape you're maintaining. What's the secret here? I had a conversation with Shankar. Shankar, if you want to share your views with our users as well.
Yeah, it's I can have a whole webinar on that, but suffice it to say 80% is nutrition. 80% is what you eat. I'm very, very careful about what I eat. 80% of the time again. 20% of the time, of course, we'll go out to a party. We'll do, obviously we'll eat wrong and all that. Even that, I maintain a fairly controlled eating, even if I'm eating out. So I do a lot of that. 20% is really the gym and all that. And that you don't need to spend hours in the gym. I don't believe it's required to build a good body and to be, internally healthy. But focus on nutrition. That is really key. So, I think intermittent fasting is very good. Eat as much raw food I eat. Like my lunch now is going to be 100% uncooked. 100%.
Oh.
So I'll have just, there's no cooking at all that I have in most of my meals. It is largely raw food. So, that's basically it. And if you eat raw, you will become healthier. There's enough science behind it. So, 80% of the time, it's just nutrition, 20%, gym, do your thing. As you grow older, you will need to be more muscular to make you mobile in your old age. And the whole point is health. We need to focus on it. And I find in India that focus is very, very, very low amongst corporate India, amongst all of us. And I, from a child, I've been an athlete. So I've always focused on fitness, but I do that even more now because, I'm enjoying life, and if, I'm in my 50s, and if I bat well, I can, okay, you can get hit by a truck and die, or you can, have a plane crash and die. That's fine. Leave that aside. But otherwise, I don't want to die because my habits were bad. Okay. I don't want to myself cause my own death. So I think everybody owes it to themselves to be fit and healthy because paisa ka maza hi tab hai yaar. Hospital bed pe kya, तुमको क्या मजा आएगा यार? You cannot do anything. Become fit. Focus on your health before it is too late.
Oh, absolutely, Shankar. So I think we got all the mantras on wealth from you. We are getting all the mantras on health from you. And the user has actually said, you please create a thread on your Twitter about your diet and fitness regime. So thanks a ton, Shankar sir. And we want to hear you for the next decade. So forget about it. Being fit, healthy, fine. We hope that you remain that way. So we can hear your views over the next few decades on the markets itself. Lots of love from all of us, Shankar sir. Be healthy, be fit, and all of you as well. Thank you for tuning in. Thanks, sir, for joining us, and thanks, folks, for tuning in as well. See you soon.
Thank you, guys. Thank you for having me. Thank